Welcome back. The SGX 50 suggesting a 65-point downtick, but there'll be plenty of stocks to focus on. And our research team is joining in to run us through that entire list. CNBC's top list of stocks for the day. But Rima, you go first. You're tracking the two IT numbers that came last night, HCL Tech and Wipro. How were they?
HCL Tech strong, Wipro soft. That's the one-word summary of the numbers. But let's talk about, let's delve into the actual numbers. So for HCL Tech, constant currency revenue growth at 3.8%, in line with consensus expectations. Margin expand by 100 basis points ahead of what market was projecting. Deal wins have gone up by 16% on a quarter-on-quarter basis. So this is an all-round beat from HCL Tech. But the positive surprise was that the company went ahead and raised the full-year revenue forecast. Earlier, they were expecting a 12 to 14% growth. Now they're expecting 13.5 to 14.5. So this will provide a lot of confidence. And remember, HCL Tech anyway trades at relatively lower valuation. The margin guidance got tightened to 18 to 19%. But that doesn't come as a big surprise. Talking about Wipro, where the ADR, by the way, was down about 1.5% in the US yesterday. Q2 was in line with expectations, as the numbers on your screen tell you. But the miss was on the Q3 guidance, which was modest. They're just penciling in a 0.5 to 2% growth, and that has disappointed the street. Brokerages like Nomura, CLSA have all lowered their EPS estimates on the back of Wipro's, okay performance in Q2 and the modest, softer than expected Q3 guidance.
Good thing is that both are the cheapest, right?
Yes.
IT services.
About 15.5, 16 times forward multiples.
So, I mean, that comfort is there, and numbers, as Rima pointed out, of course. Well, oil marketing companies should be in focus. Sonal is here to tell us why. Sonal, hi.
Good morning, Prashant. Well, yes, they'll be in focus. The stocks did well yesterday in trade as well. And we got to know that the cabinet has approved 22,000 crore rupees as one-time grant to PSU OMCs in order to cover for the losses that they had been incurring in their domestic LPG segment. Sources are suggesting that they asked for 28,000 crore rupees, but the government went ahead and gave them 22,000 crore rupees for this. There were higher working capital debt for these companies because of this, and this could be taken care of now. So there could be some more relief rally in these particular stocks. But important to note that oil marketing companies are still making losses in their fuel retail segment. On petrol, they are making gains. On diesel, they are making losses. So net, there is a loss that these companies are making. Systematic said that they were making loss of around 280 crore rupees on fuel sales. So this is something that we need to watch out for. The crude prices above $90 per barrel, they have cooled off. But that is another thing that could be hurting their GRMs as well. But yes, the LPG part, that is a good news for these companies.
Okay, all right. Thanks a lot for that, Sonal. Well, let's focus on Vidya.